Hello class. Okay, so today we're going to be looking at the chapter in 7 and 8 perpetual inventory exercises. So this is where we're going to be reviewing everything in chapter 7. Okay, so in chapter 7 we learned about purchases of inventory, right? Perpetual inventory purchases, right? We learned about how we do a purchase returns, allowance, and discounts, okay? And we also learned in the second half of chapter 7 was dealing with sales, right? Because overall, at the end of the day, chapter 8 is when we do the costing method, where we see that purchases and sales of inventory affect the outcome of the overall perpetual inventory, right? So in this case, in the second half of chapter 7, we learned about sales returns, and allowances, as well as some discounts. So here we have our exercise here, our scenario all written out for the month of May, okay? We have our lovely chart of accounts to help us out what kind of inventory accounts or what type of accounts that we need to journalize. Here's our inventory worksheet, and we're going to practice how to journalize as well. So starting with the very first question here, your inventory method is perpetual and it is moving average. So in this case, we're going to practice moving average once again, and we're going to see how purchases affect it, how returns affect the purchases as well as sales returns, and so on and so forth, okay? So we're applying all the concepts that we learned in chapter 7 and applying it with chapter 8 and costing it out and see how it affects the inventory worksheet. So let's go ahead and dive right in. So on May 1st, we purchased 500 brown mugs at $2.65 each, with the freight costing $100, and you bought it on an account from Cuppy's Co. with terms of 5% 15 net 30. So here we purchase some inventory, right? Now in this case, with the rules of perpetual inventory, looking at my chart of accounts, what you're going to notice is my inventory item is going to be mugs. So in this case, account number 150 for mugs, right? This is perpetual inventory, not periodic inventory, right? We don't use purchase expense. We journalize the inventory item based on what we purchase. In this case, we bought mugs, so that's exactly what the inventory item is. It is mugs, right? We also place it on an account, so therefore we have some accounts payable right here, okay? So let's go ahead and journalize this first. So on May 1st, okay, we purchased some mugs, okay, on an account from Cuppy's Co. Okay. And account number 150 was the mugs, the inventory account. And my accounts payable is account number 201. Okay. Now in this case, we purchased 500 mugs, all right, at $2.65 each, and the freight was $100. Now, I'm going to first practice journalizing it first, and then we'll go ahead and plug it into the inventory worksheet and then journalize it afterwards, okay? But for now, let's just practice on journalizing the entry here. So we have Cuppy's Co., right? That's the place that we purchased these from. Okay, we purchased 500 mugs, okay, and they cost $2.65 each with a freight of $100, and we were also given terms. We were given terms of 5% 15 net 30, okay, so 5% 15 net 30, okay. That's something that we should put in there. 5% 15 net 30. That means in 15 days, we're able to take a 5% discount. If not, then in 30 days, the bill is due. So if we purchase this on May 1st, right, in 15 days, so May 16 is our last cutoff date to be able to take the discount. Okay, so if I bought 500, right, units at $2.65 each, right, so I'm going to go ahead and calculate that. So 500 times 265, okay, plus my freight of 100 should give me a total of $14.25. Okay. Okay, so I'm gonna so it should be a grand total of $14.25, right? You can separate it. So if I did my purchase of 500 units at 265, right, that will give me $13.25 plus my freight of 100, which gives me $14.25. So there's my journal. Now that I finished my journal, I'm going to plug it into my inventory worksheet. Okay, so inventory worksheet. Okay, so it is May 1st, right? We're going to skip over the cost of goods sold because we purchased 500 units at $2.65 each with a freight of 100. So again, right, 500 times 265 should give me $13.25 plus 100 should give me a total of $1,400. Okay. And in this case, right, since it's the first batch of inventory that we have, right, because we're doing moving average, I am going to solve for my cost per item. So I'm going to take my $14.25 divided by 500, and I should get $2.85 even. Okay, so just to test to make sure it's even, I'm going to pull out my decimal, okay, to show me that it ends on that 5. So since I have my first batch of inventory, right, I'm going to go ahead and carry the value over into my inventory on hand, okay? Filling in my quantity and filling in my total cost, because in this case, moving average is going to require me to constantly recalculate my average cost per item. So in this case, I'm going to have my calculation right here in the middle, right here, where I'm constantly calculating my average cost per item. And I'm going to drag this formula all the way down. So then every time I plug in a quantity and I plug in a total cost, it should always recalculate my average cost for me automatically. So in this case, it cost me $2.85 each. And I'm also going to expand this so we can see our unrounded numbers. Okay? So right here, my first batch of inventory was 500 units at $14.25, okay? And that is it for my first scenario, okay? So let's see what happened next. May 5th rolls around and you end up returning 15 broken mugs for a full refund, okay? So we end up returning 15 broken mugs for a full refund, okay? So that means I made a return. Now in this case, right, it is May 5th. I need to figure out what my accounts are going to be. So in this case, right, I'm requesting the vendor that I need a return. So in this case, I never paid them in the first place. So that means I'm going to be reducing the amount of accounts payable or the amount that I owe to the vendor. Okay, so that's the first thing I'm going to recognize is I need to get a refund. So therefore, I'm not actually going to get money back because I never paid them. So I need to reduce what I owe. And in this case, right, where did I place my inventory items? I shoved them all in the mugs account. In this case, I need to decrease the amount of mugs in my account because I don't have 15 mugs anymore, right? I decreased the value of my inventory. So therefore, I'm going to take it directly out from my mugs account, okay? And that's what I need to record is I'm going to record that I'm going to get a refund. Okay, and it's going to come out of my mugs account because I'm decreasing the amount of mugs I have. So in this case, 201 and 150. Now I need to figure out how much each mug is going to cost to me. Now I can also take a look above here, right? How much did each mug cost me originally? In this case, right, I purchased each one at $2.65 each. If I'm getting a full refund, right, so I'm going to go ahead and say return 15 broken mugs, right, that cost me $2.65 each for a full refund. Okay? So therefore, I can simply calculate this. 15 times $2.65 each should give me a total of $39.75. Okay? Now, I can also solve this in my inventory worksheet as well, right? So I'm going to go, so now that I finished my journal, I'm going to plug it in right now. Okay, I'm saying it is May 5th, right? And this is what I'm going to do. I returned 15 broken mugs, right? And it's going to cost me $2.65 each. So in this case, I can't return freight. So obviously there's no freight involved here. But I do have a total cost, right? And this is going to decrease my account, right? It's going to be my quantity times my unit price, which is going to give me negative $39.75, which is exactly what I solved for in my journal, right? I solved that returning 15 of those broken mugs at $2.65 is going to give me a $39.75 refund. So in this case, I need to adjust my inventory because I don't have those 15 mugs anymore. I end up requesting a refund for them. So in this case, right, straightforward, if I purchase 500 and I end up returning 15 of them, I should be left with 485 units. Okay, same thing here. If I owed 14, or if I originally purchased the entire amount by 14.25, right, and I end up getting a refund for $39.75, then I should get a total amount of $1,385.25 remaining. And as I put right here, right, my average cost per item is going to automatically calculate this for me. It's going to take my total cost of the $1,385.25 and it's going to divide it by my total quantity of 485 units, which is going to give me an average cost of $2.856186. Okay? So it's definitely changed my average cost by a lot because I have a different quantity and a different total cost now. All right? So in this case, what I'm going to do here is with the moving average, I like to block this amount off so I no longer need to look at it or use it anymore. Okay? So there you go. I have my refund for $39.75, which is right here. Okay? So then, that very same day, right, we also end up selling 10 mugs for $10 each for cash. So in this case, right, I sold 10 mugs for $10 each for cash. So let me go ahead and journalize this because this is a sale. Okay? Now, of course, our assumption is that we have sales tax, right? So let's take a look at my chart of accounts. I recognize that I have some sales. I sold it for cash, so I need to put it in my cash account. And the assumption is the tax is going to be 8.25%, right? We all know that from practicing in class, right? So in this case, I'll be collecting cash, some sales tax, and some sales. Okay, so sales is 401, sales tax is 230, and cash is account number 102. All right? So this is what my journal is going to look like. All right, it is May 5th, right? The same day I received cash for my sales, okay? But I also sold some stuff and I also charged some sales tax. Okay? So starting from cash is account 102, sales is account 401, and my sales tax payable is 230. Okay? So in this case, right, you were given that you sold 10 mugs at $10 each for cash. Okay? So my sales is going to be 10 times $10, which is $100. If tax was 8.25%, okay, how much tax am I going to charge for 8.25%, which should give you $8.25 each. So in this case, I sold for a grand total of $108.25. Okay? Now you can choose to say, make a note here of how many items you sell, but in this case, right, we're dealing with perpetual inventory. So with perpetual inventory, we need to also adjust our inventory accordingly because we sold it. So here we need to do the second part of the entry, which is to solve for the cost of goods sold, and we're going to take it out of my inventory account. So cost of goods sold is 501 and my inventory account is 150. Okay? So that's exactly what I have to do because I end up selling my inventory items. So cost of goods sold, account number 501, and I need to adjust my inventory account for my mugs, which is account 150. Now in this case, this is where I journalized it, right? This is what I have here. And I know for a fact that I sold 10 mugs. But in this case, I need to use the inventory worksheet to figure out how much it cost me to sell those 10 mugs. Okay? So in this case, I sold 10 mugs for $10 each. So I need to pop into my inventory worksheet to figure out how much it actually cost me. So in this case, May 5th, I sold 10 units. Now in this case, because I'm using moving average, my current average cost per item right now is $2.85618. So in this case, right, I need to use my equal round formula to figure out how much it's going to cost me in general. Okay, so 10 times $2.85618 is going to give me a total of $28.56, right? 6-1, right? 6-1, that one is going to tell you to not round up. So in this case, $28.56. So now I need to update my inventory as well because I just got rid of 10 items. So in this case, right, 485 minus 10 is going to give you 475, okay? If I started out with 1385.25, right, and I sold a total of $28.56, I should get a grand total of $1356.69, which, again, because I have the formula right here on my Excel spreadsheet, it's going to automatically calculate me my average cost to be about the same, okay? And I'm going to cover this up because I don't need to look at it anymore because right now, after the 5th has happened, I sold my inventory. This is the amount that I'm looking at from here on out. This is my updated amount of inventory. I have 475 items left. So in this case, my cost of goods sold, this is the number that I'm actually solving for, which is $28.56. So $28.56 is my total cost of goods sold for selling 10 mugs. Okay? That's how much it cost me to sell. Okay? All right, so then on May 6th, right, you end up selling 20 mugs at $10 each to customer A on an account, and you gave them terms of 10%, 10%. net 30. Okay, so chart of accounts, right? Since I sold to customer A on an account, right? So that means we let them pay me later. We're going to be associating with an accounts receivable account, right? Account number 103, accounts receivable, right? Because they didn't pay me now, they're going to choose to pay me later. So in this case, right, we sold 20 mugs at $10 each to customer A on an account. So I'm going to go ahead and plug in that it's May 6th, right? I need to sell first before I adjust my inventory. So in this case, I have an accounts receivable. Okay, count 103. I have another sales. And I also have to charge my customer as well some sales tax. Okay, so in this case, right, you could choose to make a note here saying you sold X amount to customers, X amount. In this case, I can also save it till the very end. So in this case, right, because these two, they're related to each other. So that's what I'm going to do. I'm going to have those two be related to each other. So in this case, I sold 20 of those mugs at $10 each, giving me a total of $200. Okay? If tax was 8.25%, right, I'm going to be charging a total of $16.50 for my tax. So in this case, what I have a grand total is $216.50 that customer A owes me. Okay? So that's what I'm going to make a note here is, actually I'm going to wait till after I do the cost of goods sold. So now that I have my sales, right, I need to adjust my inventory because I got rid of more inventory. I sold it. Okay, even though I didn't get paid for it yet, the idea is I already sold it, I already got rid of it. So therefore, it doesn't exist in my inventory anymore, right? So I need to go into my inventory worksheet to solve for my sales that I sold to customer A. Okay, so May 6th, right? We sold 20 mugs for $10 each to customer A. So in this case, I sold 20 mugs. Okay, right now my average cost per item is $2.85618. Okay, so the amount, right? How much is my total cost of goods sold if I sold 20 units at $2.85618? Okay, and that's going to give me a grand total of $57.12. Okay, $57.12. Right? I also need to update my inventory because in this case, I just sold 20 more units. So 475 minus 20 gives me a total of 455. Okay. My new total cost, right, $1356.69, and I sold $57.12. Should leave me with $12.99 and 57 cents. Okay. Which made my cost per item change once again. It's increased by 10,000th of a penny. Okay, very small change. Okay. So that means now that I sold my inventory, right, as of May 6th, I have a total of 455 units left. Okay. So once again, I finally solved for my cost of goods sold, which is $57.12. Okay. And I can now make my note saying that I sold 20 mugs, okay, to customer A, and I gave them terms of 10% if they paid me within 10 days. If not, the entire bill is due in 30 days. Okay? On an account, terms 10%, 10 net 30. Okay? So right now, customer A owes me a grand total of $216.50. Okay? And they have 10 days to make the discount. If not, they have 30 days to pay off. So in this case, on May 16, right, 10 days from now, May 16, they can make the discount for the 10%. Okay. All right. So then May 8th rolls around and we end up making another purchase of 250 mugs at $2.75 each with a freight of 50. Okay? So in this case, right, and I brought it from on an account from Cuppy's Co. with the same terms of 5%, 15, net 30. So in this case, right, I'm purchasing more inventory, 250 mugs on an account for $2.75 each with the freight costing 50. Okay? So in this case, it is May 10, right? May 8th, May 8th. And here, I don't need to type it in again. It's the same one as this one. Okay? That I'm purchasing inventory, right? So therefore, I'm going to recognize my inventory, which is mugs. I paid it on an account. This time, I only purchased 250 mugs at $2.75 each. Okay? Now, this is where I can, once again, I don't have to do anything. I could just actually plug it into my inventory worksheet. So in this case, I didn't have to go to my journal. I could have gone straight to my inventory worksheet. So May 8th, and plug it into my purchases section, which was I bought 250 units at $2.75 with a freight of 50, right? 250 at $2.75 with a freight of 50. Okay, 250, 275, 50. So in this case, what's my total purchase price here? I'm going to take 250 times 275. I get $687.50 plus 50. Going to give me a total of $737.50. So this is the number I can use to plug into my journal. Okay? But before I go ahead and do that, let's plug it into my inventory on hand. Because now, right, I need to solve for my new average cost per item because I just increased my inventory. So I have 455 units left. I'm going to add 250 to it to give me a total of 700. Okay? And I'm going to add my new totals. Okay? To get me a grand total of $2,037.07, which, because my inventory went up by 10 cents, right? I went from 265 to 275, right? It should roughly increase your cost per item. In this case, it increased it by 3 whole pennies. And I'm going to block this off because we don't need it anymore, right? We're focusing on the 700 items that I have available to sell. So in this case, my journal is going to use that $737.50. $737.50. Okay. So then, that very same day, you end up returning 50 of those mugs because they were the wrong color. Okay? They were black cups instead. Okay? Cuppy Co. Okay, said there's nothing wrong with them. You could still sell them to your customers, right? Maybe it's a special knockoff deal or whatever, right? So in this case, you have special black mugs that you can sell. Okay? And you have 50 of them. Limited edition. Okay? And of course, Cuppy's Co. offers you an additional 15% discount to reprimand their mistake, saying, sorry, I shipped you the wrong items. Let me make it right. I'll give you 15% discount off of those items so you can keep those items and get a discount off of it. So in this case, you accept it. So I need to calculate what 15% of those 50 mugs are. Now in this case, let's go ahead and figure it out right here on an inventory worksheet. Okay? It is the same day, May 8th, right? Let me fix the date here. Okay, so May 8th. Okay, we did not return anything. So in this case, nothing I'm returning. I still end up keeping those mugs. However, I just got a discount off of it. So in this case, you need to keep in mind that it is going to be a negative number. Now we know that each coffee mug, okay, cost you $2.75 each, right? We're assuming that this is the batch of inventory that we got the wrong shipment in. Now, in this case, right, what I have to do is I have to go to my total cost because this is where I have to figure out this here, okay? I need to figure out what 50 of those mugs, right? What 50 of those mugs are going to cost me in grand total, right? So in this case, I need to do 50 times the 275, okay? So 50 times 275, right? And because I need to take a discount, right? I'm going to go ahead and put my negative in there so I can have my negative discount in here. And it's going to be for 15% because once I figure out what the 50 times $2.75 is, right? That's going to give me a grand total, and I'm only going to be taking 15% out of it. So in this case, I should get a total of $20.63. Okay, so let's do that again. If I just figure out what 50 times 275 was, right, that gave me a total of $137.50. I need to figure out what 15% of that is. Okay, so $137.50. Okay, right, times 15%, it gives you $20.63. Okay, so again, but I have to throw in that negative sign somewhere. So in this case, 50 times the 275 times negative 0.15 should give you $20.63. So in this case, right, I didn't end up decreasing my items in quantity because I didn't return anything, right? Okay, so in this case, I did not return anything. Okay, however, I did get a discount, and that total amount was for $20.63. So therefore, it should decrease your value down to $2016.45. Okay, because I took my 2037.07, right? I took out my discount of $20.63 to give me a total of this. Okay. So now I can report that my discount for that 15% is going to be $20.63. Okay. And this is what I'm going to do. Since it's an allowance, right, same thing goes as well as this one, right? Because in this case, I don't have a purchase returns and allowance, right? I must take it out directly from my inventory because I didn't pay for 50 of those mugs for full price. I end up getting a discount on them. So in this case, that's exactly what I need to do. I need to journalize that I'm going to be getting a refund, okay? Right? Which is going to decrease my accounts payable because I never paid. And it's going to be taking it out from my inventory directly for $20.63. And then I need to make my note that I end up getting an allowance, okay, for 50 black mugs, okay, at $2.75 each for 15% discount. Right? Okay. So that's what happened on May 8th. So the next one here on May 10, right? We end up selling 30 of those mugs for $10 each for cash. Okay? On May 10, you end up selling 30 mugs for $10 each for cash. Okay? So in this case, you need to split up your transaction here because I need to record one thing at a time. So first things first is I need to record my cash sales. Okay? In this case, right here's my cash sales. For May 10. Okay? And in this case, because you're breaking up your transaction, you should finish this off with some kind of description. So in this case, I sold 30 mugs. Okay? So in this case, if I sold 30 mugs at $10 each, that should give you $300. The tax, right, is 8.25% of the $300. Okay? Which should give you a total of $24.75. So that means in grand total, you should have received a total of $324.75 in cash. Okay? Right? And of course, because I sold some stuff, right, I need to calculate my total cost of goods sold. Okay? And I need to adjust my inventory accordingly. So, cost of goods sold and my inventory for May 10. I need to make a note that I sold 30 mugs, which in this case, right, I need to stop here because I can't figure out how much the cost of goods sold without going to my inventory worksheet. Okay? So in this case, May 10, right, we sold 30 mugs. My current cost per item right now is the $2.860206, right? After adjusting my inventory, right? This is my new cost per item. So I need to figure out how much it's going to cost me if I sold 30 units, 30 mugs at $2.860206, right? Which is going to cost me a grand total of $85.81. So I need to adjust my inventory because I sold my inventory. I sold 30 of those units. So 705 minus 30 is going to give you 675. Okay? And same thing here. I need to adjust and subtract out the $85.81 to give me a grand total of $19.30 and 64 cents. Okay? Which should still give me an average cost of 2.86020, and then it's 0. So it dropped by 6/100 of a penny. Okay? Not that much of a difference. Thinking about, tenths, thousands, or hundred thousands of pennies. That's not going to make a huge difference. It only makes a difference if you sell those large quantities. Sell 100,000 of those mugs. Okay. So in this case, now I have 675 units left at a total of $19.30 and 64 cents. So the number I'm looking for here is how much it cost me to sell 30 of those units, $85.81. So again, 85.81 is my cost of goods sold. All right, so that was May 10. Okay. May 12th rolls around and you end up selling 60 of those mugs at $10 each to customer B on an account. Okay, you gave them terms of 10%, 10 net 30. Okay, so in this case, we sold 60 mugs at $10 each to customer B on an account. Okay. So in this case, straightforward, right? We sold to customer B on an account. Okay. And so we need to journalize the sales first and then adjust our mugs accordingly. So here, accounts receivable. Okay. For May 12th. But this time, we end up selling 60 mugs for $10 each to customer B on an account. Okay, so in this case, right, I'm going to adjust this real quick. We sold 60 mugs to customer B on an account, but we gave the terms to all of our customers to be the same, right? 10%, 10 net 30. Okay. So in this case, right, if we sold 60 mugs at $10 each, right, we get a grand total of $600, right? And we need to charge the tax, right, to be 8.25%, which should give me a total of $49.50. So therefore, in grand total, customer B owes me a total of $649.50. Okay. So then now we sold 60 mugs to customer B. We now need to adjust my inventory accordingly. Okay. So it is May 12th. And we sold 60 mugs, okay? And right now, my current average cost per item is $2.860200. So therefore, right, my total cost of goods sold should equal to me $171.61. Okay? So this time, I sold 60 mugs, so therefore 675 units minus 60 should leave you with 615 units left. Okay. If I started out with 1930.64 and I sold a total of $171.61, I should be left with 1759 and 3 cents. Okay. So in this case, I adjusted my average cost per item. It is roughly the same, but it did increase by 300,000th of a penny. Right? It went from 200 to 203. So again, after that, I should have 615 units left. And this is what my total cost of goods sold cost me for selling 60 units. So $171.61. Right? 171.61. Okay. So now that you sold to customer B, all right, next one is May 15, where customer B decides a couple days later, he decides to come back to the store and end up returning 30 of those mugs for a full refund. Okay? So in this case, right, customer B never paid me. So in this case, we need to adjust the account receivable, which is going to be the total amount that he owes me, because he still has time to make a payment on it. But he ended up coming to the store and saying, no, I want to return 30 of my mugs. Okay? We don't know. Maybe he overbought too many. He didn't use them, or maybe he did use them, and then now he's bringing it back because he's saying this is too much. Right? We don't know what the situation is, but we know that customer B is going to return 30 of those mugs. And of course, it's within a couple days. It's not going to hurt us that much, right? So in this case, we're going to go ahead and grant customer B the full refund of the 30 mugs, okay? And basically, we're taking back the 30 mugs. So in this case, right, there's two things that we got to do. First, let's go ahead and give customer B the money back for the sale that we sold him, right? Because we need to adjust that first. So, right, it is May 15, right? May 15, let's take a look at a chart of accounts. This is a sales returns and allowances, right? So in this case, right, because the customer's returning the product to us. So therefore, as that, right, instead of doing a reversal to a sales, we're going to do a contra account using the sales returns and allowances. So account number 406, right? We also have to take note that we charge the customer for sales tax. So we need to also give a portion of the money back to the sales tax. And because customer B did not pay me with cash, we have to assume that we're going to be giving customer B, we're going to reduce their account receivable. Okay. So let's take a look here, right? We said that it's a sales returns and allowances. Okay, which was account number 406. Okay, 406. Okay, and we have to give a portion of the money back because we charged him sales tax. Okay, and of course, we're going to reduce the amount that they owe me because they actually did not pay me. So, okay, so sales tax is 230, accounts receivable is 103. Okay? So in this case, we need to figure out if we originally sold each coffee mug to him for $10 each, right? And he's attempting to return 30 of those mugs. Okay? If that's what the case is, right? And we're giving customer B a full refund, we need to acknowledge that we need to figure out how much the sales returns and allowance is going to be. So 30 times 10, right? What was the original selling price? It was $10 each. So 30 times 10 gives me $300. Okay? Out of those $300 that we're giving back, we need to figure out how much tax we're going to also have to give back based off of that refund. So in this case, right, I should be giving back $24.75 each. All right, so in this case, I'm going to be reducing customer B's account by $324.75 each. And I'm going to make my note here right now because in this case, this is pertaining in customer B's items. So in this case, customer B returns 30 mugs for full refund. Okay? So because, right, we are giving customer B a full refund and they're returning the product back to me, I now need to update my account because now I got an actual return of items. So in this case, right, because I originally sold these mugs to customer B, I need to reverse it because now I technically unsold them, right? I didn't sell them in the first place, so I need to reverse the cost of goods sold and I need to revert the items back into inventory. So in this case, what I'm going to recognize is because I am returning the product or the customer returned the product back to me, I need to put the product back into my inventory for mugs and I need to undo the cost of goods sold. Right? And I need to make a note that customer B returned. In this case, you don't even need to make a note that customer B returned it. You could just say that it's just you returned it. But in this case, I'll just put customer B returns 30 mugs. So in this case, I have to go back into my inventory worksheet to figure out how much it cost me. Now, this is the rule of thumb of how the inventory worksheet works. You do not reverse what the cost of goods sold is because in this case, right, let's say customer B purchased it a while back and then decides to return the items, okay? In this case, we're not going to backtrack and take what our original cost per item was back then. We're going to actually move on forward because in this case right now, that's what I need to look at and how much is it going to cost me right now to put it back into my inventory. Okay? Now, yes, so in this case, if I were to revert it back to, let's say back up here, right, before I made my purchase of inventory, right, each item cost me $2.85, where opposed right now, they cost me $2.86. To save you some, complications of having to calculate back in the past, right, this is how we're going to process currently, because right now, if you do go back in time and plug that number in, you're going to mess up your inventory worksheet because then you're adding in costs that happened in the past, and that's where you're going to have to adjust your whole entire inventory from there. Okay? So in this case, the safest and easiest way to avoid all of that is to simply just return the product and figure out what the average cost of it as of right now. Okay? So, okay, it's May 15. We're going to undo, saying that we are returning 30 of those mugs. So this is the cost of goods sold section. So I'm undoing 30 of those. And I'm going to look at what it's costing me right now. How much is it costing me right now? In this case, it's costing me $2.860203. Okay? Which in this case, right, it's close enough to what you actually originally sold it to. The previous one was 2.860200 opposed to that 3. But because we're going to do this to kind of keep the idea of being consistent and consistent with the current numbers being relevant, okay? Instead of going backtrack and undoing things or backtracking to the point where we take numbers from previous batches or previous things that we sold at that previous costing point and then having to readjust everything afterwards, then that's where you'll save the trouble here. So in this case, luckily, they're not too far apart. They're, closely related, but still, you still don't want to ever do that. So to, save you the complications of that, just go ahead and take the average cost per item as of right now. So in this case, that's what I did, and it's going to cost me to revert a total of $85.81. Okay? So that's what my total cost of goods sold that I have to revert back into my inventory. Okay? So because I need to revert it back into my inventory, I need to add this back into my inventory. So in this case, 615, right? I need to add $30 units in there. So as you can see, I'm doing subtract because it's a double negative, right? Subtracting a negative will turn it to a positive. So in this case, right, if I had 615 and I need to add back 30, it's going to give me a total of 645, okay? Same thing here, right? I need to add back my $85.81, okay, to give me now a grand total of $1844.84, okay, which then will increase my cost per item again by 0.06 of a penny. So in this case, not really by much, okay. Okay, so because of this, right, now I do have my average cost per item and I have my reverse of my cost of goods sold to be a total of $85.81. So again, we only do this because it will be a headache if you take one of these numbers from the past, right? Because once you do that, you have to basically go back and undo everything and recalculate everything. And that's going to just be more of a headache. Okay, this is the better way to do it, is what is it going to cost you right now? Okay, so in this case, it's going to undo $85.81 back into my inventory. Okay. So that's that there. Okay. That very same day, we end up selling, okay, 25 mugs for $10 for cash. So we end up selling 25 mugs anyways for $10 each for cash. So, right, this is a cash sales. So straightforward, what I'm going to do here is I'm just going to copy a journal entry that we've already done before. So cash sales, right? And then we're going to have to adjust our inventory anyways. So we received cash for the sale on the 15th, and then we need to adjust my inventory for those sales. So in this case, right, I sold 25 mugs, okay? Okay, I sold 25 mugs for $10 each for cash. So in this case, sales, if I sold 25 mugs and it cost me $10 each, my grand total is $250, okay? I need to figure out how much the tax is, which is 8.25%, which is going to give me $20.63. So in this case, I should get a grand total of $270.63. Okay. All right. And because I end up selling 25 units, I need to stop here, go to my inventory worksheet to figure out how much it's going to cost me to sell those 25 units. Okay. So here I sold 25 units. My average cost per item is the $2.860209. okay? Which is going to give me a total cost of goods sold to be $71.51. Okay? So $71.51. Okay? So I need to adjust my inventory because I started with 645 units, but I sold 25 of them to get a total of 620. And I also need to adjust my inventory here as well because I sold $71.51. So I should be left with $17.73 and 33 cents. So again, this now, again, it didn't drop by that much. Okay. So I have 620 units left, and I sold my 25 units. It cost me $71.51. Okay. So then on May 18, customer A decides to make a payment in full with cash. Okay? So that means they are making a payment for what they owe on May 18. Okay? So let's take a look at what customer A has done, right? We sold to customer A on, we sold to customer A on the 6th of May, right? We sold 20 mugs for $10 each. Now, customer A did not make any returns or make any allowances in this case. So that means let's go ahead and take a look at what they actually owe me. Okay? So in this case, in my journal, let's take a look. As of May 6th. May 6th, right? Customer A owes me a total of $216.50. Okay? Now, in this case, I also gave customer A terms. I said if they can pay me in 10 days, I'll give them a 10% discount. If not, then they have to pay me in full within 30. So in this case, 10 days from May 6th is May 16th. Okay? And in this case, right, today is going to be May 18th. So they just barely missed the discount period. So in this case, they have to pay in full of what they owe me. So in this case, right, and it told me that here, customer A paid me in full with cash, and they missed the discount period by 2 days. So that means they have to pay me $216.50 because that's what my journal says that they owe me. They owe me a total of $216.50. So therefore, right, I need to make a note here. It's May 18, right? We received cash because that's what customer A paid me with. Okay? And we're going to reduce the accounts receivable because customer A ended up paying for what they owed me. So in this case, 103. Okay? Now, again, customer A owes me a total of $216. So customer A right here, customer A owes me $216.50. Okay? And they're paying me in full in cash. So in this case, I need to make a note here that customer A paid in full. That's it. They don't receive a discount. They don't need to do anything here because In this case, they just paid for what they owed. Okay. This doesn't affect inventory because, again, this is their responsibility that they have to pay me for what they owe. We already charged them for the amount of items that we sold to them, and we already adjusted my inventory for this sale already, right? It already happened. In this case, this isn't a transaction that will affect my inventory because they're just simply paying for what they owe. Okay? So let's see what's next. Okay? So that very same day, you end up selling 50 mugs for $10 each for cash. Okay? So May 18, you end up selling 50 mugs at $10 each for cash. Okay? So once again, let's see, this right here is definitely not enough space for your transaction. So what I'm going to do here is I'm going to have to go to the next page here. Okay. So there you go. It is still May 18, right? And this time we sold 50 mugs in grand total. Right? So if I sold my mugs for $10 each and I sold 50 of them, my grand total is $500 for my sales. Now in this case, I also need to calculate how much tax I'm going to be collecting off of those $500. In this case, a total of $41.25. Okay? So in this case, that means in grand total, right? In grand total, I received a total of $541.25 for the sales. Okay? And now I need to go ahead and adjust my inventory for those 50 units. So, inventory worksheet once again. We end up selling on May 18, 50 units. Right now, my average cost per item is still that $2.860202, okay? Which is going to give me now a total cost of goods sold to be $143.01. So in this case, that's what it cost me to sell 50 of those items, okay? So now I need to adjust my inventory again because now I no longer have 620 units. I end up selling 50 of them. So now I am down to my last remaining 570 units left. And I need to also adjust my total cost here because I end up selling $143.01 worth. So in this case, I should be ending up with my inventory at $16.30.32. So now my average cost per item is now $2.862018. Okay, so straightforward. Okay. So in this case, not many changes again to my cost per item. Okay. So now that I have that, right, I have my cost of goods sold to be $143.01. $143.01. Okay. So now on May 20th, we end up purchasing 400 units of mugs at $2.80 each, with a freight costing $80. Okay? And of course, we place it on an account from Cuppies Co. with terms of 5%, 15, net 30. So in this case, right, we purchased 400 mugs at $2.80 each with a freight of 80. Okay. So in this case, I can pop into my inventory worksheet first and then plug in my journal later. May 20th, we purchased 400 units at $2.80 each with a freight of 80. So in this case, my purchase price, right, is $11.20 plus 80 gives me a total of 1,200 units, $1,200, right? So I'm going to update my inventory with that. So 570 plus 400 gives me 970. Okay. My 1630.32 plus 1,200 is going to give me 2830.32. So in this case, because I purchased my inventory at $2.80, which is a lot more, it's 5 cents higher, right? It's going to increase my average cost to about roughly 4 cents. So in this case, it increased it by 5 cents. It went from 86 to 91. Okay, so that's a lot. All right, so now that we have this, right, we purchased the 400 units at $2.80 with a freight of 80, gave me a total of $1,200. So in this case, I'm going to go ahead and copy this journal here because it's going to be the same, right? We're going to increase our inventory while increasing our accounts payable, okay, on May 20th. Right, but this time we end up purchasing 400 units at $2.80 each. But the term's still the same, right? It's still 5%, 15, net 30, all right? And my grand total amount that I owe is $1,200. Okay? That's that there. Okay? So then, that very same day, you end up also selling 30 of those mugs for $10 each for cash. So once again, I need to adjust my inventory, right? Because I have another cash sales. And this time I end up selling an additional 30 more units. So in this case, I have perfectly enough in my inventory or in my journal for this transaction. So it's May 20th, okay? And this time, I end up selling 30 of those mugs. Okay? So again, if I sold my mugs at $10 each, right? 30 times 10 gives me 300, right? The tax on this, 8.25%, is going to give me a total of $24.75. So same thing here. You're going to get a total of $324.75. And now I need to adjust my inventory to figure out how much it's going to cost me to sell those 30 units. So again, May 20th, we sold 30 units, but this time my average cost per item is now $2.91,78505. So therefore, my cost per item has already increased. So therefore, it's going to cost me a grand total of $87.54. Where if we look in the past, right, those 30 units, right, so here's one that I have sold on May 10 here. That cost me $2.86, which gave me $85.81. because my average cost per item increased because my purchase caused it to increase, right? Now it's $87.54. So in this case, it's getting more expensive and it's going to cost you more. So in this case, $87.54. I need to adjust my inventory because I end up selling 30 units. So I'm down to $940. Okay, I need to also adjust my total cost because I just sold $87.54. So I should have a remainder of $27.42.78. Okay, and my average cost per item still is roughly the same, but this time it's about 917845. So okay, so again it dropped by 50 thousandth of a penny, 5,000th of 50 thousandth of a penny. So here's the number I'm looking for: the $87.54. Okay, $87.54 is what it's gonna cost me now. Okay. So then May 22nd rolls around and customer decides to pay in full with cash. So let's take a look at when I sold to customer B. Okay. Customer B, let's see. I sold to customer B actually on the 12th of May, right? You sold 60 mugs at $10 each to customer B. However, customer B came back 3 days later and end up making a return, okay, of 30 mugs. So in this case, right, we end up refunding him for a full amount for the 30 mugs that he's returning. So in this case, we need to take a look in our journal of what our actual adjustment is, right? So in this case, right, we're taking a look at selling to customer B, okay, on an account for the 12th of May. So in this case, accounts receivable, we charged him a total of $649.50. However, we also gave him back, right? We reduced the accounts receivable by $324.75. So therefore, let's calculate that total, right? So today is May 22nd, right? We are going to recognize how much customer B owes, right? So in this case, right, if the original was $649.50, right, and we end up refunding him $324.75, that means customer B owes me $324.75. Okay? Now, in this case, when did we sell to customer B? We sold to customer B on May 12th. Okay? We also gave customer B some terms. If they pay within 10 days, we're going to grant them a 10% discount. Now, in this case, 10 days from the 12th is the 22nd. When is customer B making their payment? They're making their payment on the 22nd of May. So in this case, they made the discount. So therefore, we need to adjust for the sales discount, okay? We know this, that we're going to get paid in cash, right? That's what customer B said that they're going to pay me back in. They're going to pay me back. They're going to pay us in cash. We just recognize that they just met the sales. So in this case, we must give them a sales discount, okay? And of course, because we originally charged them the full amount for the entire sales, right? We also have to give them a portion of their sales tax money back because we are now discounting the amount that they deserve the discount for. So in this case, we need to subtract out the tax from that and give them back the tax money for that. So in this case, right, let's take a look. We originally sold 60 mugs to customer B, and then customer B ended up returning 30 of those mugs. So how many mugs actually were sold? In this case, right, we actually sold 30 of those mugs. And in this case, what was the selling price of each mug? We sold them for $10 each, okay? Now, if the discount was given to be 10%, right? We need to figure out what the 10% off of the total amount of sales was. So in this case, right, we need to figure out what 10% of 300 is, right? Because in this case, right, we cannot discount freight, or in this case, there was no freight. We cannot discount sales tax. So in this case, right, we're going to take a look at how much we actually sold to customer B. Customer B, we sold 30 mugs at $10 each. So therefore, that gave a total of $300, right? 30 times 10, $300. So in this case, we can only discount 10% of that. So what is 10% of $300? So 30 times 10 times 0.10 should give you $30. Out of those $30 that we're discounting, right? We need to figure out how much tax money to also take back as well. Okay? So in this case, what is the tax on those $30? It's going to give you $2.48. So then now, right, how much should customer B actually give me in cash? Okay? So in this case, what I'm going to do is I'm going to take the amount that he owes me, right, of $324.75, okay? I'm going to subtract the discount of the $30, right? And I'm also going to subtract that $2.48 that we have to, take back for the tax that we originally charged for. So in this case, we should be receiving a total of $292.27 worth of cash. Okay? Right? Because that's basically what he owes me, minus the discount, minus the tax money that we have to also give back from that. So in this case, they're going to be giving me $292.27. And my last note here is we're going to recognize that customer B paid in full and also received the 10% discount. Okay. All right, once again, this is a payment, so has nothing to do with my inventory. Right? So, let's see. That was the 22nd of May. So here, that very same day, you also end up selling an additional 15 mugs for $10 each for cash. So once again, this is just a little, exercise where we're constantly purchasing, constantly selling. So in this case, on the 22nd of May, we end up selling another 15 units. Okay? And we need to do this, right? Because it was cash sales, and we need to also adjust our inventory as well. Okay, so that should fit just perfectly in your journal. Okay. So this was May 22nd, okay, we end up selling 15 mugs. Okay, so 15 mugs at $10 each. So where are we? Sorry. So we got 15 mugs at $10 each. Gives me a 150. We need to figure out how much sales tax we're going to be charging, which is the 8.25% of the $150, which give you $12.38. So therefore, you should be collecting a total of $162.38. Okay. We need to go to our inventory worksheet to once again figure out how much it's going to cost me to sell those 15 items. Okay? All right. So it is May 22nd. We sold 15 units, right? My average cost per item right now is currently the $2.91 and 878,457. So in this case, Excel had already calculated for me, telling me it's going to cost me $43.77. So I need to adjust my inventory accordingly because I just sold 15 units. So I should have a total of $925. Okay, I need to also adjust that I just sold $43.77. So I should now have a total of $226.9901. Okay. So that should give me an average cost per item of roughly the same. Okay. So the number that I'm looking for here is the $43.77. Okay. All right, let's see what's next. May 25th rolls around, okay, and on May 25th, we had a Memorial Day sale, okay, where all mugs are 40% off discount, okay? And of course, that very day, you end up selling a grand total of 175 mugs for cash, okay? So in this case, let's take a look, all right? We end up selling a total of 175 mugs for cash. It was a Memorial Day sale. So in this case, let's take a look at my chart of accounts. So in this case, what am I looking at? I'm looking at a sales discount for account number 405. Okay. So how does this work? Let's go ahead and plug it into our inventory. Let's go ahead and plug this into our journal. So it is May 25th, right? We're always going to receive cash for this sale, right? It's cash sales. We're going to recognize the sales discount because in this case, sales discount is what's going to decrease my sales, okay? And because we sold stuff, we're also going to charge tax on it because we sold it in store, okay? So again, we received cash, which is 102. Sales discount is 405. Sales is 401. Sales tax is 230. So I also gonna also plug this in up here as well, right? Because we had our accounts here as well. Okay. So in this case, this is what I gotta recognize, right? I sold, so I'm gonna make a note here, right? That I sold 175 mugs. right? And they're discounted by 40% discount for the Memorial Day sale. Okay? Memorial Day sale. Okay, for Memorial Day. Okay? So in this case, right, everything in this is going to be 40% discount. Okay? So, let's take a look. If I sold a total of 175 mugs, right? And the original cost per mug was $10 each, right? That's going to give me a total of $17.50, right? Because I sold 175 mugs at $10 each, right? But they're discounted by 40%. So in this case, I need to figure out what 40% of this sale is. So 40%, okay, is going to mean I'm going to be discounting $700. Okay? So that means if I sold it, right, for $700 less, that's going to give me a total of $1,050 even. And that's the number I need to use to charge a sales tax because what I really sold was $10.50, right? Because I discounted the mugs by 40%, which was $700 off. So in this case, right, that means I need to charge the tax based off of the $10.50, right? The $17.50 minus the $700 gives me $10.50. That's the amount that I needed to charge the tax on. Okay? So that should give me a total of $86.63. Okay? So if I want to think about it this way, right? If my total amount that I'm supposed to be receiving or out of the sales was $10.50, right? I need to add the tax of $86.63, and that's going to give me my $1136.63. Okay? Or what I can do is, this is what I need to solve for, is my total debits equaling my total credits. So in this case, right, if this is going to equal my total credits, right, minus my total debit here, I'm going to get the same exact answer of the 1136.63 because I use the rules of equal debits with my equal credits. Okay, so I should get the same 1136.63. And that's how I solve for my discount. Okay. And of course, because I end up selling 175 mugs, I need to adjust my inventory accordingly. So in this case, I need to solve for how much it cost me to sell 175 mugs. So right here, I sold 175. Okay? So I'm going to go to my inventory worksheet once again. It is now May 25th. We sold 175 mugs at a total cost per item of $291, which again is going to give me a grand total cost of goods sold to be $510.62. So I need to adjust my inventory because I no longer have 925 units. I end up selling 175 of them. So I'm left with 750 units. Okay? I also need to subtract out that 510.62 to get me a total of $2,188.39 because I just sold $510 worth. Okay? So once again, I have 750 units left remaining. Okay? And here, my total cost of goods sold is $510.62. $510.62. Right? So then let's see what happened next. All right, got three more things left. Number one, let's see. On the 28th of May, customer C wants to buy all 50 black mugs for $10 each from you. And of course, you offered them an additional 10% discount, and he paid with a Visa payable, with a Visa credit card. Okay? So in this case, right, customer C decides to buy all the black mugs, right? Because maybe they walked in and said, do you have any other colors besides brown? And we said, you know what? We have some black mugs. And he goes, I want to buy them all. Okay? So because he's getting rid of this inventory off of your hands when you already had someone who gave you a by mistake, right, for the previous purchase, right? That's going to say, well, I'm going to kindly offer you a 10% discount off that because you're getting rid of the inventory off of my hands. Okay? So in this case, right, and they're going to pay with a Visa credit card. Now, when a customer pays with a Visa credit card, right, where does the money actually go? You're not receiving cash. They don't owe you any money because a Visa credit card pretty much essentially gives buying power to the customer, right? Pays for the items for them in advance, and then that means the customer owes the credit card company. So in this case, they don't owe you anything. So it's not accounts receivable. They didn't give you cash, but they paid by a credit card. And what does the credit card do? It goes straight to your checking account because, again, it's an electronic, form of payment, right? I'm paying with a credit card and it's going to be linked to my bank account. So in this case, they're paying with a Visa credit card, so that means it's going to go straight to your checking account. Okay? So here, we're going to be taking a look at a few things here. We have a checking account. We're going to sell the product to them for the 50 black mugs. We're going to charge them some sales tax, and we're also going to give them a 10% discount. Okay? So, very similar to this, right? The only difference is, right, he's going to be paying with a Visa credit card, so that's going to go automatically straight into your checking account, and this was on May 28th. Okay? And what I'm going to say here, sold this, right, we're going to take that out because we actually end up sold 50 black mugs to customer C, and they received 10% discount. Okay. So let's go ahead and take a look at this. We originally sell our coffee mugs, right? Checking this account number 101. We sold originally a total of 50 black mugs, right? Each coffee cup, right, they're still going to be on original price, right? Original price of $10 each. So sales, right? We sold 50 of them for $10 each. So your total amount is $500. But because we gave him a 10% discount, right? 10% of $500 is going to be $50. So in this case, what did we actually charge customer C? We actually charged them $450. So therefore, we're going to figure out how much tax to charge off of the $450. So in this case, we're going to calculate the tax here. So the tax is going to be $37.13. So therefore, right, I'm going to use the rules of the debits matching the credits. So in this case, right, that means I received $487.13 to my bank account, okay, for this transaction. So now, last but not least, we need to update our inventory to get rid of those 50 units out of my inventory. Okay? So again, it's May 28th. We sold the 50 units at $2.91, which gave me a total of $145.89. Okay? We're going to subtract that 50 units to get a grand total of 700 units left, right? We're going to subtract this cost out of $145.89 to give me a grand total of $2,042.50. Okay? Wow, how magical it panned out to be an even penny. Okay? So there you go. So now we need to focus on that it cost me $145.89. $149.81. Oh, 89. Wait, 145.89. Okay. So it is now May 30th, and you end up paying all 3 bills that you owe for Cuppies Co. all on one check. And of course, the last thing that you should have is 700 units on hand. And in this case, that is correct, right? We do have 700 units left on hand. Okay. Now, in this case, I need to make a payment to all 3 of those purchases onto one check. So in this case, it is May 30th, and we're going to pay everything that we owe to Cuppies Co. on an account, right? So we're going to reduce my accounts payable, okay? And I'm going to be paying them with one check. Okay? So again, accounts payable is 201, and this is 101, okay? So first thing that we're going to do is we have to determine how much I owe in grand total. So first off, I'm going to take a look at all of my purchases that I've made, okay? I made my very first purchase of inventory on May 1st, right? But I end up returning 15 of those broken mugs for a full refund. So there's my first purchase here. My second purchase was on May 8th, right, of 250 units, but I end up getting a allowance because 50 of those mugs were the wrong color. So I end up getting a discount of those 50 items, okay? And then my last purchase that I made was on the 20th of May, which was the purchase of 400 units, which I didn't make any returns or got any allowances there. So right there gives me my grand total of the 3 purchases that I've made. Okay? So let's go ahead and calculate how much that is. Okay? Starting with my very first purchase that I made on the 1st here, I owed $14.25. Okay? But I end up returning 15 of them, which reduced my accounts receivable by $39.75. Okay? However, on May 8th, I end up purchasing another one, which increased my account by $737.50, right? But I end up getting a discount for $20.63. Okay? And then the very last purchase I made was on May 20th, right? I purchased a total of 400 units, okay? Which increased my total accounts payable by $1,200. So in this case, I owe in grand total $3,302.12, right? That's how much I owe in grand total. Okay? Now let's take a look at my discounts because I also have to remember I have an opportunity to take advantage of discounts. So in this case, right, my mugs here for my very first purchase, they gave me 15 days. Okay? So that means 15 days after May 1st is going to be the 16th. And in this case, did I make my discount if I'm paying on May 30th? No. I missed it, right? I was supposed to pay on the 16th, but I end up missing it. But I still had to end up paying on the 30th. So in this case, I still had to pay anyway. Okay? All right. Then the next batch was the 8th. We purchased on the 8th, right? They gave me 15 days to make a payment to receive the 5% discount. And in this case, right, 15 days after the 8th is going to be the 23rd of May. So in this case, am I able to make the discount if I'm paying on the 30th? No, I missed it again by 7 days. So in this case, don't get to receive a discount there. Okay? Then the last batch of inventory that I made was purchased on May 20th, which they gave me 15 days to make a payment. And in this case, right, 15 days from May 20th is going to be June 5th. So in this case, if I'm making a payment as of May 31st or 30th, right, then yes, I definitely made the discount because I paid within 15 days. So in this case, I made the discount. So I need to determine what my discount is actually going to be for the purchase that I made on the 20th of May. I purchased 400 units at $2.80. So therefore, I can only discount that amount right there. So let's figure it out. What is what is 400 at $2.80 going to give me? Okay? So in this case, right? 400 times $2.80 is going to give me $11.20. I can only discount 5% off of this amount. So in this case, that 5% is going to give me $56. So therefore, that's going to go against what I need to pay them, right? So in this case, because that's what the discount does, it gives you money back. Now in this case, because I charged on my account originally for full price of $1,200, right, for the purchase on May 20th, right, I need to now discount that by $56. And that means because I recorded the original purchase on May 20th at full price, I need to subtract it out from my inventory because I didn't pay full price for them. I paid it at a discounted price. So therefore, I need to subtract $56 from my inventory. And then I need to figure out how much I actually need to pay. And in this case, I subtract these two numbers, right? That means I'm going to pay $3,246.12 because I'm taking out that $56 discount, okay? And that's going to give me that much right there. And I'm going to make a note here that I made a payment to Cuppies Co. Okay, for paid all 3 purchases. Okay, so made on May 1st, May 8th, and May 20th. And then I'm going to also make a note that I received the 5% discount on purchases on May 20th. Okay? And of course, I paid using check number 1. Okay? Unless I specify. Did I specify which check I'm going to write? In this case, yes, I need to pay on check number 201. Okay? So, now that I made a payment here, here's the very last thing I have to do because I end up receiving that discount. I need to now actually take out this $56 out from my inventory because I discounted my inventory. So in this case, it is May 30th. Okay. I didn't make 31st, right? No, May 30th. Right? I end up discounting, so I don't need to make any notes here, right? But you could do this, make it a reference point that this was, for the 280, right? In this case, right, I can figure out what my discount is by figuring out what the discount off of the 1120 is. But in this case, that's what I'm going to do. I'm just going to go ahead and just make a note that it's going to be since I already calculated it, I can already just say it's negative $56. Okay? And I can go ahead and take that out. Or if I want to be really specific and actually fill out all of this, right? I can say that this is my discount here. It's going to be, right, whatever this times 400 was, which in this case gave me a total of this, right? And I'm going to calculate what that 5% discount was, which is going to give you $56. Okay. So, obviously, right, this discount's not going to affect my items on hand. Okay, right? Because this is 0. 0 does not affect my discount, does not take away my items, right? So in this case, I'm still at 700. Okay. However, I need to subtract $56 because that is what I don't have anymore, right? I end up discounting $56. So in this case, I am left with 700 units at $1,986.50, giving me a new cost per item to be $2.83,785. Okay? And that is it for the chapter 7 and 8 exercise. Okay? So we get to take a look at how we moved from one to another. Okay? Looking at what a sales returns does, a sales allowance does, a purchase returns does, and a purchase discount does. Okay? And we practice journalizing. Okay? All right? So again, that is it for today, okay?